Gold just broke $5,000 an ounce. Bitcoin is still around 67,000, down 63% from its high. And most people, they look at these two facts and see chaos. Two assets, completely different things, no logic, just noise. But when you understand how institutional money actually moves through the system, these two charts are telling you the same story in perfect sequence. Today I am going to show you that story across 7 markets using institutional volume structure. And by the end of this video, you'll understand exactly where the money is right now, where it's going, and what the specific signals are that will tell us when the regime actually changed. So let's get into it. Before we touch a single chart, I want to give you the mental model that frames everything you're about to see, because without this, you're just looking at squiggly lines. It's called the Cantillon Effect. Richard Cantillon, he was an economist who figured out something that Wall Street still quietly uses today. Money doesn't enter the economy uniformly. It flows in sequences from its source to the central bank through the chain of recipients. And the people closest to the source benefit first, before the inflation effects reach everyone else. So in modern markets, the sequence looked like this. Central bank liquidity first. They go into bonds, then to equities, then to risk assets, and in the end, crypto and speculative instruments. So that's the Cantillon clock, and the IVT terminal tracks where the sequence institutional money actually is in real time. Look at the Cantillon flow reading across my dashboard right now. Every single instrument I'm watching shows the same thing: accumulation, with liquidity bullish, equity bearish, risk bearish. That's a very specific message. It means the tap at the source has turned on. Money is flowing into bonds and monetary assets, which is exactly why gold is at $5,000. But it has not yet cascaded into equities, and it definitely hasn't reached crypto. The Cantillon clock is ticking, but we're in the first inning. Keep that framework in your head for every chart we look at today. All right, so let's start with Bitcoin here, because this is one of the charts that has every retail trader completely confused now. Price is at 67.4 and down from 126,000 in October. That's a 63% drawdown in about 4 months. The fear and greed index is at 11 out of 100. 11. The average Bitcoin ETF investor is sitting on a 20% paper loss. Sentiment is objectively terrible. But here's what the terminal is showing me, and this is why I want to start with Bitcoin. The volume compression is reading coiled. 100%. And 100%, that is maximum compression. So let's explain what that means structurally. After this directional move down, in this case in the 5th February capitulation, price enters a consolidation phase, volume contracts, volatility compresses. The spring is ready. At some point, the compression has to resolve. The market has to pick a direction and move with velocity. At 100% call, we are at that point, or at least we are very close to it. Now here's the discipline part, and this is the one thing that separates the IVT framework from just saying, oh, it's oversold, buy. High compression does not tell you the direction. It tells you that when the move comes, it will be fast and it will be large. So look at the other readings. We have a stability 0 out of 2. That means the evidence of institutional accumulation building a base at current levels. The AVWAP, that is negative 5.8%, and the AVWAP is declining. Institutions are not absorbing at a fixed level. The reference point itself is moving down. And look at the swing type. It's a bear swing type. It's confirmed bear. 219 bars into the swing. So what does this mean practically? We don't have a buy signal yet. We have an observation signal. Maximum compression in a bearish regime means we are watching for two things. First, does the spring resolve to the downside and test the 60,000 level in the low value area? Or two, and this is the setup that would change everything, Bitcoin print a sustained close up above the AVWAP, because that AVWAP reclaim right around 72 to 73,000 combined with stability rising from 0 to at least 1 or 2, that's the regime flip signal. The Cantillon clock gets to Bitcoin last, but when it does, with the spring this tight, the move will not be gentle and it will not be a grind higher. So we wait, the terminal will tell us when. Now look at the mirror image of Bitcoin. Gold, $5,000. The bias is bullish. The VWAP deviation is plus 10%. The confidence score is 9 out of 10. The volume compression coil at 93%. Everything I just said about Bitcoin being a bearish compression, gold is in a bullish compression. We do have some strong deviation firing at the recent price action, and those are institutional absorptions events. When price pulls back and volume structure shows buying rather than selling, that's the terminal flagging the institutions are treating dips as opportunities, not exits. The VWAP deviation of 10% against rising AVWAP is critical. It wants to contrast this directly with Bitcoin. Bitcoin minus 5% against a falling AVWAP. It means institutions are chasing it lower. Gold's plus 10% against a rising AVWAP means institutions are chasing it higher. The AVWAP itself tells you the trend of institutional cost basis. So why is gold here? The Cantillon sequence. Gold sits adjacent to the liquidity layer. It's the monetary asset that benefits first when central banks' conditions improve. We had a CPI print earlier this week at 2.4%, below consensus. Rate cut expectations are moving forward. That directly benefits gold because real yields decline and the cost of holding a non-yielding asset drops. But there's something bigger happening here too. The BRICS unit pilot, a gold-backed settlement currency, has created structural non-dollar demand for physical gold that doesn't go away regardless of what the Fed does. Central banks are not buying gold tactically. They are buying it strategically. That's a different kind of bid. At 93% coil, gold is set up for its next impulsive move. If that compression resolves bullish, and all the structural evidence should say it should, 5,000 and around the 5,200 is the next target. This is what it looks when Cantillon flow is actively reaching an asset. The S&P 500, 6,857. And this is the most ambiguous chart on the board. The bias reads bearish, but look at the swing type, it is bullish. A 371 bar bull swing that has not technically broken. Look at the AVWAP. We are currently 0.4% below the AVWAP. And so this is a decision point. Either institutions defend this level and the bull swing continues, or they don't and we get an accelerated move towards the prior week's low. Look at the convergence status. Diverged 69%. That means nearly 70% of volume structure factors are pointing in a different direction from the nominal trend. That's not healthy bull market. That's distribution inside an aging bull swing. What happened yesterday gave us a window into the regime. The FOMC minutes showed policymakers split, some members signaling they would consider tightening further if inflation proves sticky. That's the opposite of what the Cantillon sequence needs to advance. For the money to flow from bonds into equities, you need rate cut conviction. Split Fed minutes create uncertainty, and uncertainty keeps institutionals more defensive. The S&P stays on the watch list. I'm not gonna trade this right now. I'm gonna see where it goes today. An interesting point to buy would be at the previous week low, or if we reclaim the AVWAP. The NAS 100, and this one is cleaner than the S&P. where the S&P ambiguous, the Nasdaq has made a structural call. We have a bias bearish and we have a confirmed bear swing. The AVWAP deviation of -2 and a compression coil at 66%. Notice that the Nasdaq confirmed its bear swing before the S&P. That's typically the leading indicator. Tech breaks first, the broader index follows. If you're trying to read direction on the S&P, what's the Nasdaq for a leading signal? The win rate tracker here is extraordinary. 92% on the last 13 signals, 12 wins, 1 stop. That's a function of a clearly defined regime. When the IVT confirms a bear swing with price below AVWAP, sell rallies to AVWAP is the systematic process. The terminal has been precise in this. 2 levels to watch. We have the previous day low, 24,650, and we have the previous day high at 25,100-ish. That's the scenario if the S&P breaks below AVWAP and the Cantillon flow doesn't advance. Quick but important, the euro dollar. This one is live right now. We have a bearish bias in a swing, in a bull swing, and look at the win rate, 100%. 6 out of 6 signals closed at target with an average hold time of 14 bars. The previous day low at 1.1740 is the immediate target. The macro driver is simple. Hawkish FOMC pushed yields higher. Dollar strengthens, euro weakens. This is the Cantillon sequence playing out in currencies. The dollar strength is consistent with an early stage accumulation regime where liquidity is building in the US system before it disperses. If you're watching currency flows as a cross-asset signal, a weak euro and strong dollar is consistent with everything else on the dashboard is showing. I want to show you 2 equities that I think most people watching this channel have completely overlooked. And they are overlooked for exactly the wrong reasons. Baidu is a Chinese tech. Most Western retail traders have mentally excluded Chinese equities because China trade has burned people before. But look at what the terminal is reading. It's reading a bullish bias plus 3% above VWAP. Compression is building at 79%. 80% win rate over 10 completed signals. DeepSeek, it changed the AI narrative. We now have evidence that world-class AI capability can be built at a fraction of Western infrastructure costs. That changes the capital allocation calculus for global tech. And here's the Cantillon insight. Capital that was flowing exclusively into US megacap AI is now looking for distribution to infrastructure plays. And Chinese AI infrastructure is getting a second look from institutional players who need diversification. Volume compression is building at 79%, means the institutional positioning is accumulating before a directional move. The structure above the cluster at $140 is the test. If Baidu closes and holds above this level with expanding volume, this is the chart that confirms the China AI rotation has institutional backing, not retail FOMO, institutional positioning. Now, Dollar General. This is the Cantillon insight that doesn't get talked about enough. We are bullish. Confluence 11, the highest on the entire dashboard. Volume compression is coiled. Institutional grade trend, right? The VWAP deviation is 40+%. So this is a very sustained trend. The Cantillon logic here is elegant. When liquidity tightens and consumer spending softens, which is exactly what a higher for longer Fed environment produces, capital rotates from discretionary retail into discount retail. The population that shop at full price stores starts shopping at Dollar General. The institutional money that was in consumer discretionary follows them. Dollar General is receiving Cantillon flow that would normally get into cyclicals. This isn't a trade, it's structural allocation. And an 89% coil Dick's next move of this base will be sharp. 11 confluence score, that is the terminal highest conviction reading on the board today. So let me put this all together for you. The Cantillon clock right now. Liquidity is running. That's gold at $5,000. That's Dollar General at 40% above AVWAP. That's defensive positioning across the board. Equities are not receiving the flow yet. The S&P is hovering around AVWAP. The Nasdaq has confirmed the bear swing. Until the Federal Reserve moves this from split and uncertainty to cutting in Q2, institutional money in equities stays cautious. Risk assets, crypto, are last in the sequence. And Bitcoin at maximum compression and fear and greed at 11, the spring is ready. The setup is there, but the Cantillon flow has to make it through equities before it comes into Bitcoin in size. So what changes this picture? 3 things I want to watch. I want to see Bitcoin sustained close above the AVWAP at $72,000 with stability rising. That's a regime flip signal. 2, FOMC language shifting explicitly towards Q2 rate cuts. That's the catalyst that advances the Cantillon inflow sequence from layer 1 to layer 2. 3, the S&P holding above the AVWAP with a volume compression entering coil territory. That tells you the distribution phase is complete and absorption is beginning. Until those conditions are met, the framework says own what's already receiving the Cantillon flow. Have a prepared watch list for the next, and let the terminal tell you when the sequence reshape change rather than guessing. So trade the regime, follow the volume, price is the last thing to know. So if you want a full daily brief that goes deeper into every one of these setups with the specific IVT levels, the regime confirmation triggers, and the cross-asset Cantillon analysis, I publish this every morning on my Substack. The link is in the subscription. If you want my terminal, it's you can get that on TradingView and also as a part of my paid Substack briefing. So the link is also in the subscription. If this kind of institutional volume framework is new to you, subscribe to my channel. I put out new analysis every week, and I try to make every video something that you can actually use, not just watch. Hit the like button if this was useful to you. It genuinely helps the channel reach new traders who think about markets this way. So I'll see you in the next one. Trade safe. Bye bye.